Welcome to the deep dive. You've given us a really interesting set of sources this time, all circling around the recent situation with President Trump and Federal Reserve Chair Jerome Powell,
Yeah, definitely. It feels like things really got stirred up.
especially after the European Central Bank cut interest rates back in April. That seemed to be the trigger.
Right. And President Trump really escalated his public criticism of Powell, even talking about removing him.
Exactly. So our goal today is to really dig into the political side, the legal complexities. Can a president actually fire the head of the Fed?
And what that could mean, the sort of ripple effects for the U.S. economy, for the markets, it's a big deal.
It really is. It touches on fundamental questions about, well, how our government and economy are set up.
That's right. It's about the separation of powers, isn't it? And that crucial independence central banks often need to do their job effectively.
Okay, so let's jump right into this latest round. April 17th. It sounds like President Trump really didn't hold back.
No, multiple times in just one day, attacking Powell.
He called some of Powell's recent statements complete chaos and really hammered home his view that the Fed should have followed the ECB, should have lowered rates.
Uh-huh. And then the real headline grabber.
Yeah, that Powell's termination cannot come fast enough.
Yeah.
What stands out to you about that specifically?
Well, it's the level of personal conviction in those statements. It's not just like a policy disagreement.
Right.
He's framing Powell's actions as a fundamental failure, a failure in his duties.
And when he says Powell would have to comply if asked to resign because he's always too slow to act.
It shows a very specific view, doesn't it? A really forceful idea of how that relationship, president and Fed chair, should work in his mind.
Yeah. And this isn't the first time we've seen this kind of tension, is it?
Not at all. The sources remind us, you look back at 2018, the Fed was raising rates then.
And Trump was worried about that tightening, hurting economic growth. I remember that.
Exactly. And even earlier, there were mentions of him wanting, quote, more influence over the Fed, though later he did pledge to let Powell finish his term.
So it's kind of a familiar pattern, but maybe bolder this time.
It seems like it. And if you connect this renewed pressure to the bigger picture, well, it's happening just as some forecasts are predicting, a slowdown in U.S. economic growth.
So President Trump seems to think lower interest rates are the answer, the key tool to stop that slowdown, maybe even boost growth.
That appears to be the logic, yes. But then you contrast that with Powell's approach, which is more cautious on monetary policy. He's being more careful about cutting rates.
Why the caution, do you think?
Well, it could stem from the ongoing uncertainty around inflation, specifically the effects of President Trump's own tariff policies. That's the tricky part.
Ah, right. Are the price pressures from tariffs just temporary? Or is it something more baked in that the Fed needs to worry about long term?
Precisely. That's likely a central question for Powell and the FOMC. Different priorities, different reads on the economy.
Okay, that makes sense. Now, let's look at some of the political reactions. Senator Elizabeth Warren, she had a pretty strong take.
She did. She argued, basically, look, the president has free speech. He can say what he wants.
But he absolutely does not have the authority to just fire Powell. Full stop.
Right. And she made that interesting point, comparing it even to authoritarian systems.
Yeah, that even regimes we wouldn't call democratic will often see the value in an independent central bank, for attracting investment. Why is that? Why is that independence so widely valued, even there?
That's a really crucial point. It boils down to credibility, essentially.
Credibility.
Yeah. Even regimes that aren't, let's say, paragons of democracy often get that a degree of separation between politicians and monetary policy makes their financial system look more reliable.
It signals to international investors that decisions are based on economics, not just short-term politics.
Exactly. That economic factors are driving policy, not just, the next election cycle. And that's vital for keeping investor confidence up and attracting capital.
And speaking of confidence, Citibank, they had a pretty stark warning.
They did. They used that powerful metaphor, didn't they? Crossing the Rubicon.
Right, suggesting that messing with the Fed's independence, especially alongside other, let's call them unconventional policies like high tariffs,
could do severe, maybe even permanent damage to economic and market confidence. That Rubicon metaphor, it really hits home. It suggests a point of no return.
Yeah, it does.
Because financial markets are just so sensitive, they react very quickly to any hint of political interference in what should be independent monetary policy.
Investors need predictability.
They rely on it. They rely on the credibility of central banks to make decisions. If they think policy might get swayed by short-term politics instead of long-term economic health.
Trust erodes fast.
Very fast. And that can lead to volatility, investors pulling back. It's a serious risk.
Okay, so we see the high stakes, politically, economically, but let's pivot to the legal side. This is the core question, isn't it?
It really is.
Can the U.S. president actually fire the Federal Reserve chair just because they disagree on policy? Like rates are too high or too low?
Well, the sources are pretty clear that the legal framework here is murky. It's not perfectly defined.
How so? What does the law actually say?
Okay, so you look at Section 10 of the Federal Reserve Act. It does allow for removing members of the Federal Reserve Board, and that includes the chair.
But that's a but.
There's a big but. Only for cause.
For cause. And what does that usually mean in this context?
Traditionally, yeah, the generally understood meaning has been things like serious misconduct, maybe neglecting your duties, some kind of abuse of power.
Not just, I don't like your interest rate decisions.
Exactly. Not simply having different views on where monetary policy should go. That's generally not seen as cause.
And this brings us to that old Supreme Court case, right? Humphrey's Executor from 1935.
Yes, a landmark case. It essentially ruled that the president couldn't just remove members of independent agencies. The case was about the FTC, the Federal Trade Commission, simply over policy disagreements.
The idea was to shield these bodies, give them some insulation from direct political pressure.
Precisely. But interestingly, the sources mention there might be some moves or thinking within the Department of Justice about re-examining that precedent, trying to overturn it, potentially.
Wow. Okay, so what would be the significance of that if Humphrey's Executor was overturned, specifically regarding the Fed?
Well, think about the global perception. What's really interesting is the analysis from Bloomberg.
What do they say?
They suggest that if that precedent falls, the perceived independence of the Fed would likely take a big hit internationally.
So how the rest of the world sees the Fed would change?
Significantly. They point out it could make the U.S. kind of unique among the big G7 economies.
Or unique how?
In losing its statutory central bank independence protected by law for reasons that aren't related to, say, banking supervision reform. That would put the U.S. in a distinctly different and maybe concerning position globally regarding the stability and reliability of its monetary policy.
Okay, so let's try and bring these threads together. We've got President Trump very publicly disagreeing with Fed Chair Powell, especially after the ECB cut rates.
And this is happening against a backdrop of maybe slowing U.S. economic growth.
Meanwhile, Powell seems to be sticking to a more cautious path, maybe worried about inflation, possibly linked to trade policies.
Right. Then politically, you have this debate raging about the president's power versus the Fed's independence.
With warnings flying about market instability if that independence looks shaky.
And legally, it's ambiguous. The power to remove the chair is tied up in that for cause language and the Humphrey's Executor precedent.
Which itself might be facing a challenge. It really feels like this nexus point, economic policy, political ambition, and legal interpretation all colliding.
That sums it up perfectly. It's a complex interplay, all centered on this fundamental question. How much protection should the Fed have from immediate political pressure from the White House?
And the history shows this tension isn't entirely new between presidents and the Fed.
Not new, no. But the current intensity and the explicit talk of actually firing the chair, that definitely raises the stakes. It brings a whole new level of scrutiny.
So as we wrap up this deep dive, it's clear this goes way beyond just a fight over interest rates.
Oh, absolutely.
It really gets to the core principles of our economic governance, how stable our key institutions look both at home and, well, to the rest of the world.
And this leads us to, I think, a really important question for you, the listener, to chew on.
Yeah.
Considering everything we've talked about, the history, the expert views, those legal gray areas, what do you think is the most critical factor in keeping that balance? You know, the balance between presidential influence and Fed independence.
And maybe what are the long-term consequences to the U.S. economy, depending on how this specific situation plays out?
Exactly. It's a multifaceted issue, no easy answers, but with potentially really significant ramifications down the road. Lots to think about.